Stars videos. You know what this means? That means we're in the middle of earnings season and I'm bringing you more big cap stocks. These five have fantastic charts. They've got good earnings surprise records. A couple of them are really rallying. One is breaking out to 5-year highs. What are they? Let's see and check them out. The first one is the one breaking out to 5-year highs. D.R. Horton, ticker DHI. It is one of the largest home builders in the United States, and we all know the home builders have been red hot. But D.R. Horton, as you can see, also has an excellent earnings surprise track record. It just has that one rare miss in 2022, and then you have to go all the way before the pandemic to see the other misses. So that's impressive. It did not even miss during the pandemic chaos, especially that first quarter, when people were not going to the sales centers, they were not buying homes in that first quarter when the pandemic hit. But D.R. Horton is seeing people buying homes now, even with mortgage rates above 7%. They're able to lower prices, put out good incentives. They have less competition from existing home, sellers, because not many are selling. So D.R. Horton's still able to get those orders in, although on a slower pace than last year's crazy pace. And things are not looking as bad for the home builders as we all assumed last year, where you can see those shares sold off. So what is it doing this year? Shares are up almost 75% here year to date. They are at these 5-year highs, but they're still cheap because the earnings are holding up as the margins are also holding up. PE of just 11.6 has a PEG ratio of just 0.8. So it is a true value stock here, as are just about all the other home builder stocks, many of which are also Zacks #1 ranks right now. So this is the first to report on this actual earnings season. We had a couple that reported on the fiscal year a couple of weeks ago. Those were all solid. I'm expecting another solid report from D.R. Horton, but we're about to see what is happening right now in home building. Then we're going to switch it over to PPG Industries. And this is paint and coatings. This took a hit last year too, but it also is on the rebound. Not yet back to those 5-year highs there we saw in 2021, but it is going in the right direction. 1 year, the shares are up 28.6%. It also has a good earnings surprise track record, having beaten the last 3 out of 4. And you can see it just had a couple of misses there during the pandemic. That's pretty good. PE is now 20, so it's not all that cheap, but cheaper than some other things on the market right now, and does pay a dividend yielding 1.7%. So this is on the auto side and a lot of other kind of industrial end markets. So PPG Industries, paint and coatings, this is kind of a building block of the economy. We will see what happens with this one. Then staying on the auto side, Genuine Parts, GPC. Look at this nice chart. So they have beaten 12 quarters in a row now. Their last miss was right when the pandemic hit. And these shares have been hot during the pandemic years, but kind of treading water here a bit. Year to date, down 4.1%. 1 year, though, up 20.2%, and that does beat the S&P 500, which is up 16.8% during that 1 year period. What does the PE look like? It's trading at 18 times with a PEG of 2.1. It does pay a dividend yielding 2.3%, but we're all holding on to our cars longer, and we are going to need, replacement parts on the cars. So what is going to be happening this quarter with Genuine Parts? This is what I'm going to be tuning in on. Then we're going to keep it on the consumer side with PoolCorp, ticker POOL. I bring it every quarter because it's one of the best performing stocks of the last 33 years, basically. But it did sell off last year. I thought it might get pretty affordable, but it didn't really. It's still kind of pricey here. It has rallied a bit this year, up 19% year to date off those lows. PE of 24. It does have the 2 misses in a row. And a lot of that is because the consumer is pulling back on actually buying the pools. They're doing renovations, they're doing maintenance. So that is helping to underline the earnings for Pool Core. But as you might expect, the huge pool buying that we all saw during the pandemic when we were staying at home, when we were staycationing, that has abated and consumers have moved on to either go off and take vacations somewhere else that has a pool, or they're just doing other things outside of the home. So not as much expense, being spent on the home, but that doesn't necessarily mean things are, bad for pool. It just means that the super red hot kind of demand that they saw is cooling off. That's happening to a lot of things that are related to the home. But this is going to be an interesting one with those two misses in a row. Do they miss a third time? And do these shares, come down a bit? They have been cutting guidance in the last couple of quarters because of the weakening in the demand. What will happen this quarter? Let's see this week. And then we're going to finish it up with the transport with CSX. They are one of the railroads, and you can see they too had the big bounce during the pandemic. All that pandemic demand on the supply chain meant, the railroads were busy too, but the shares have kind of been moving sideways more recently. Year to date, they're up just 7.3%, but they are off those lows earlier in the year. And 1 year now up 15%. They have beaten 8 in a row, so that's a nice earnings surprise track record. We'll see if they can beat again, but the rails kind of just waiting for some kind of catalyst. Not real expensive, but not real cheap either. PE of 17 times with a PEG of 2.5. So that PE is in the historic range, but obviously the street is kind of taking a wait and see approach on a lot of these transports and especially the rails here in 2023. So you can see it's an interesting mix of companies that are reporting this week, all large caps, but many on the consumer side. We have the transports, home building. We're going to get it all this week and next week as well. So you don't want to miss a single episode of the Earnings All-Stars. I'm bringing them to you every week, and you can get them on Zacks.com/YouTube. And you can also get them on our website. Go to Zacks.com. You can see all the videos there, as well as on my Twitter feed and the Zacks Twitter feed. But be sure to get us somewhere. And I'll see you again next week with some more vital earnings charts.